Welcome back to Finance Buzz Friday. You know, we always bring you the most interesting stuff happening in UK financial services, and today we're diving deep into, well, a letter, actually.
Oh yeah, this one's a good one.
From the Prudential Regulation Authority.
The PRA.
Exactly, outlining their priorities for 2025.
Specifically for international banks and those designated investment firms operating in the UK.
It's basically their game plan for the year.
Their roadmap.
And why should our listeners care?
Well, if you're involved in UK financial services, this letter is a must-read. It gives us a glimpse into the PRA's thinking, what they're focused on.
So not just regulatory jargon, but actual insights into their supervisory approach.
Right, like a heads up on where they see pressure points emerging and what firms need to do to, stay compliant.
Stay ahead of the curve.
Exactly.
So the big takeaway here is the PRA is doubling down on robust governance, risk management, and controls.
Absolutely. And this makes a lot of sense considering what's going on globally.
So what's got the PRA on high alert?
It's more than just the usual post-pandemic uncertainties.
It's that perfect storm we've been hearing about.
Exactly. Rising interest rates, those persistent geopolitical risks, and the rapid pace of technological change.
Including AI, which everyone's talking about.
It's a lot for firms to manage.
Sounds like the PRA is saying, buckle up, it's going to be a bumpy ride.
Yeah.
Where should firms focus their attention first?
Well, the PRA kicks things off by zeroing in on risk management. They're basically saying firms are struggling to keep up with these complex and interconnected risks.
That's not business as usual anymore.
No, not at all. They're calling for more robust stress and scenario analyses.
So being proactive rather than reactive.
Exactly. Firms need to anticipate problems and have plans in place to handle them.
What could happen if they're not prepared to adapt? What are the implications for the UK financial services industry?
Well, imagine a firm that hasn't properly assessed the impact of rising interest rates on their loan portfolio.
Ooh, that's not good.
No, they could face a wave of defaults impacting their profitability and potentially even their stability.
And could this have wider implications?
Absolutely. It could even impact confidence in the entire UK financial system.
A domino effect.
Precisely. The PRA is making it clear that proactive risk management is no longer optional, it's essential.
Okay, so proactive risk management check. What other specific risks are they calling out?
One recurring theme is counterparty credit risk.
CTR.
Yeah,
Right.
the risk that a party involved in a financial transaction won't fulfill their obligations.
Could you give us a concrete example?
Sure, imagine a UK firm that's heavily reliant on a Russian bank for financing.
Given the current geopolitical situation.
Exactly. There's a heightened risk of that bank defaulting.
Leaving the UK firm in a very difficult position.
Precisely. That's why the PRA is so concerned about counterparty credit risk. They're saying don't just assume your counterparties will always be able to meet their commitments.
You need to be prepared for the unexpected.
Exactly. What else? Oh, data risk. That's another big one.
Data is everything these days.
It really is. The PRA is emphasizing that high-quality data is fundamental to everything. Effective risk management, sound decision-making, and accurate regulatory calculations.
And with the rise of AI and data analytics.
Right. The quality of the data feeding those systems is more critical than ever.
So garbage in, garbage out.
Exactly. What happens if firms aren't prioritizing data quality? Well, the PRA has been pretty clear about that. They've observed that poor data is a root cause of many issues that require remediation.
So they're putting their money where their mouth is.
Yes. They'll be using their own data tools to assess data accuracy throughout 2025.
More scrutiny.
Definitely firms need to be prepared.
Invest in robust data management systems. Implement those rigorous validation processes.
And ensure that their data governance frameworks are truly fit for purpose.
It's about building that culture of data quality from the ground up.
Absolutely.
Okay, so we've got risk management, data quality. What's next on the PRA's agenda?
Financial resilience, the ability of firms to withstand shocks and continue operating even in challenging conditions.
So weathering this storm.
Precisely. The PRA will be conducting ongoing assessments of individual firms' capital and liquidity.
Making sure they're prepared for the unexpected.
Right. They're also expecting firms to consider a wide range of forward-looking indicators and to really stress test their systems.
It's all about being prepared.
Absolutely.
What are some of the specific challenges to financial resilience in the current environment?
Well, we've got the Bank of England's balance sheet evolving, and this has implications for the entire UK financial system.
Right. And we can't forget about those shifts in market dynamics.
Exactly. All of this impacts liquidity and funding.
The PRA is really interested in how these changes will impact profitability, resilience, even business models.
It's about looking at the bigger picture.
And seeing how all the pieces fit together.
Exactly. And they're highlighting a particular change that's coming down the pipeline. The Bank of England's planned transition to a demand-driven framework for supplying reserves through repo operations.
Okay, that sounds complicated.
Yeah.
Can you break that down for us? What does it mean for firms in practical terms?
Sure. As quantitative tightening continues and those TFSME repayments reduce central bank reserves, firms will need to find new ways to source those reserves.
Meaning?
They'll need to go directly to the Bank of England.
And how will they do that?
Through the Sterling Monetary Framework facilities, specifically the short-term repo facility and the recalibrated indexed long-term repo facility.
So firms need to start preparing for this shift now.
Absolutely.
What's the bottom line for them? What do they need to do?
Well, they need to start thinking strategically about how these changes will affect their liquidity management and their contingency funding options.
It's about being proactive.
And adapting to a new financial reality.
Which might also have an impact on their profitability.
Absolutely. Firms will need to assess how these changes impact their bottom line and adjust their business models accordingly.
The PRA is giving everyone a lot to think about. But we've got more ground to cover with their 2025 priorities. So let's move on to the next topic, operational resilience.
Okay, let's dive in. Yeah, so even if you've got perfect data and, super robust financial models, things can still go wrong operationally.
Right, things happen.
Exactly. And that's where operational resilience comes in.
So it's about being able to handle whatever's thrown at you.
Being able to weather the storm no matter what form it takes.
I like that analogy. Right. So how is the PRA approaching operational resilience?
Well, they're laser focused on firms' ability to stay within those impact tolerances.
For their important business services.
Exactly, even during severe disruptions. And they're really emphasizing that by March 2025, firms need to be able to demonstrate that they can handle these disruptions.
Show that they can handle those disruptions.
Yeah, that they can respond and recover effectively, especially given, the whole cyber threat landscape.
Site security, that's a hot topic.
Yeah.
What is saying about that specifically?
Well, they're saying firms need to be prepared for the worst-case scenario, whether it's a targeted attack or even a system-wide failure.
And they're highlighting the risks associated with third-party arrangements.
Oh, absolutely, because a weak link in the chain can bring down the whole system.
We've seen that happen recently.
We have just recently seen real-world examples where incidents at third-party providers have disrupted services for some major firms.
So it's a wake-up call for the whole industry?
It is.
So what's the message here? What are they expecting firms to do?
They're expecting firms to have really robust oversight of their outsourcing and third-party relationships. And that includes intragroup providers as well.
So it's not just about external providers.
No, it's about understanding the risks, having solid contingency plans in place, and making sure that those partners are just as resilient as they are.
Due diligence and constant vigilance.
Exactly, and that vigilance extends to the financial health of those suppliers and their data security practices.
So it's a holistic approach to operational resilience.
It really is.
And all of this is happening against the backdrop of those upcoming consultations on ICT and cyber risk management.
Oh, right. Yes. The PRA and the FCA are planning to consult on these issues in the second half of 2025.
So the regulatory landscape is about to get even more complex.
It is. It's a clear signal that things are going to evolve and firms need to be ready.
They need to stay ahead of the curve. What could happen if they don't? What are the potential consequences for the UK financial services industry?
Well, if firms don't step up, we could see more operational failures, disruptions to those critical services, and ultimately even an erosion of trust in the financial system.
That's a high price to pay.
It is. But on the flip side, if they do rise to the challenge, this could lead to a more robust and resilient financial sector, which would benefit everyone.
So it's a pivotal moment for the industry.
It really is.
Okay, so we've talked about operational resilience, but there's one more thing I want to touch on. The PRA has decided to delay the implementation of Basel 3.1 in the UK.
They have. It's been pushed back by 12 months to January 2027.
So why the delay?
Well, the main reason was to align with the implementation timeline in the United States.
And to give firms more clarity, I guess.
Exactly.
So a bit of breathing room, but not a complete cancellation.
Right. It's important to remember that while implementation is delayed, those transitional periods in the rules will be reduced.
To ensure full implementation by January 2030.
Exactly. So the clock is still ticking.
So how should firms be using this extra time? Should they just relax and hit the snooze button?
Definitely not. The PRA has been very clear that this is not a time to sit back and relax. They expect firms to use this time wisely.
So it's an opportunity?
It is an opportunity to thoroughly assess the impact of Basel 3.1 on their operations, to fine-tune their implementation plans, and to address any potential challenges.
A chance to get ahead of the curve.
Exactly.
So don't squander the opportunity.
The PRA expects firms to continue working through those potential impacts of Basel 3.1 and to be fully prepared when the time comes.
It's a good reminder that this letter from the PRA isn't just a theoretical document. It's a call to action.
It is.
They're asking firms to take concrete steps to improve their resilience and adapt to this changing landscape.
And they're providing a roadmap for doing just that.
Exactly. We've covered a lot of ground today, from risk management in a volatile world to data quality, operational resilience, and that Basel 3.1 delay.
It's been a whirlwind tour of the PRA's priorities.
It has. So what's the key takeaway for our listeners? What's the one thing they should walk away remembering?
I think the overarching message here is that firms need to be proactive. They need to be adaptable, and they need to be resilient.
Those are the watchwords for 2025.
Absolutely. The UK financial services industry is facing a pretty complex and challenging environment.
It is,
But those firms that really embrace change and prepare for the unexpected, they'll be the ones that come out on top.
they'll be the ones that thrive.
Exactly.
So it's more than just ticking the boxes and meeting those minimum regulatory requirements. It's about building a culture of resilience.
And continuous improvement.
Right. It's about going above and beyond.
The PRA is essentially asking everyone in UK financial services to think differently.
About risk, about data, about their role in the bigger picture.
Exactly, to step up and help build a more resilient system.
So what can they actually do to meet this challenge?
Well, it all starts with leadership boards and senior management. They need to really take this message to heart.
They need to walk the walk.
Yeah, make it central to their firm's culture and operations. It can't just be lip service.
Actions speak louder than words.
Exactly. It's about embedding risk management, data quality, operational resilience, the adaptability into the DNA of their organization.
Making it part of their everyday operation.
Exactly, and actively fostering that culture of continuous improvement and proactive risk awareness.
So it's top down, but it also needs buy-in at every level.
Oh, absolutely. Everyone from the front line to the back office needs to understand their role in contributing to a more resilient and responsible UK financial system.
So that means investing in training.
Yes.
Fostering open communication.
Empowering employees to identify and address those potential risks.
Making sure that everyone feels empowered to speak up, challenge assumptions, and be part of the solution.
Exactly. That's how you build a truly resilient culture.
And I imagine technology has a big role to play in all of this.
Oh, huge firms should be leveraging technology to enhance their risk management capabilities, to improve data quality, and to strengthen their operational resilience.
We're talking AI, machine learning, data analytics.
All of that. It has the potential to be a real game changer.
But technology alone isn't enough, is it?
No. It needs to be combined with human expertise, with strong governance frameworks, and with an unwavering commitment to ethical conduct.
Finding that right balance.
Absolutely.
It seems like this letter from the PRA is a roadmap for navigating this new world.
It is. It's a call to action for the whole industry to step up, adapt, and build a future where the UK financial services sector isn't just robust, but it's a global leader in resilience and responsibility.
It's setting a high bar.
It is. The PRA is challenging UK firms to not just survive, but to thrive in this new reality. And those that rise to the occasion, they'll be the ones shaping the future of finance in the UK.
That's a great point to end on. It's been a fascinating deep dive into the PRA's 2025 priorities.
It has.
Exploring the challenges and the opportunities facing the UK financial services industry.
And I really hope our listeners have gained some valuable insights into what's driving the future of finance here in the UK.
And more importantly, I hope we've given them some food for thought. How they can play their part in building a stronger, more resilient financial system.
It's a collective effort. We all have a role to play in making sure the UK financial services sector is ready for whatever's coming next.
Absolutely. Well, thank you for joining us on Finance Buzz Friday.
It's been a pleasure.
Until next time, stay informed, stay engaged, and stay ahead of the curve.